Building Financial Freedom Through Investing. Welcome to the channel. Today, we're talking about one of the most important topics when it comes to building financial freedom: investing. Whether you're just getting started or looking to sharpen your skills, this video will break down the essentials of investing and show you how to start building wealth step by step. Let's jump in. First, why invest? The simple answer is to grow your money. Over time, inflation reduces the purchasing power of cash, meaning your money loses value if it just sits in a savings account. Investing allows your money to work for you, generating returns and helping you achieve your financial goals. Thanks to compound interest, the earlier you start, the more time your money has to grow. For example, investing $100 a month at an average annual return of 8% could grow to over $136,000 in 30 years. That's the power of investing. Now, let's talk about the types of investments. There are many ways to invest, but here are the most common. Stocks. Buying shares of a company gives you partial ownership and a chance to benefit from its growth. Bonds. These are loans you give to governments or companies in exchange for interest payments. ETFs and index funds. These are baskets of investments that track a market index, offering diversification at low cost. Real estate. Investing in property can generate rental income and long-term appreciation. Each type of investment has its own risk and return profile, so it's important to choose based on your goals and comfort level with risk. Before you start investing, you need to define your goals. Ask yourself, am I saving for retirement, a house, or a big purchase? How much risk am I willing to take? What is my timeline for achieving these goals? For example, if you're investing for a goal 20 years away, you can afford to take more risk because you have time to recover from market fluctuations. The biggest mistake new investors make is thinking they need a lot of money to get started. The truth is, you can start investing with as little as $50 or $100 a month. The key is to start small and stay consistent. One of the best strategies is dollar cost averaging, where you invest a fixed amount at regular intervals, regardless of market conditions. This reduces the impact of volatility and helps you build wealth steadily. Now, let's cover a few common mistakes to avoid. Trying to time the market. Even experts can't always predict market movements. Focus on the long term instead. Investing without research. Always understand what you're putting your money into. Letting emotions take over. Stay calm during market ups and downs. Panic selling often leads to losses. Ready to start? Here's a quick checklist. Open a brokerage account or use an investment app. Set your goals and risk tolerance. Start with a diversified investment like an ETF or index fund. Commit to regular contributions, even if they're small. Remember, the most important step is to get started today. Time in the market beats timing the market. Investing is one of the most powerful tools to secure your financial future. Start small, stay consistent, and remember, it's a marathon, not a sprint. If you found this video helpful, give it a thumbs up, subscribe to the channel, and share your thoughts or questions in the comments below. Thanks for watching.